based on opportunities in artificial intelligence. Let's get the conversation started with Angelo Zino, Senior Equity Analyst at CFRA. Angelo, thanks a lot for joining us. First of all, what is your view of valuations in the large cap tech sector? As you know, it's common for skeptics to say these stocks are priced for perfection. What do you think?
Yeah, I mean, and thanks for having me. So when we kind of start thinking about valuations, that is kind of always the topic of debate for big tech and tech in general. But we kind of think about where valuations stand. They're not attractive anymore, but we continue to say that we think that they're reasonable given kind of the earnings trajectory that we see for these names over the next 2 years. So for instance, we're actually looking for earnings growth north of 20% here in 2025. We actually think there's upside to some of the estimates out there for some of the bigger cap names out there, like an NVIDIA, among others. And then as you kind of go into 2026, we continue to think the earnings trajectory looks healthy, kind of a low to mid-teens growth. So it'll see deceleration versus what we've seen kind of in recent memory, but still very good, healthy rates. And when we kind of look at the valuations more on a 2026 basis, because our target prices are over a 12-month period, as far as 2026 is concerned, most of these big tech names are kind of trading in kind of the mid-high 20s range. So we think over the next 12 months, you should be able to see at least kind of 10 to 15% upside in many of these names, which would imply some multiple compression, from some of these elevated multiples, but still upside to these names. Okay,
let's begin with your first pick, Microsoft, one of the best known companies in the world. It's now trading at about 32.5 times expected earnings. The stock is up about 13% so far this year. That's a double-digit gain, but well short, of course, of what the benchmark NASDAQ composite has posted. Why do you like Microsoft?
Yeah, so we actually think the recent underperformance in Microsoft gives it a really nice setup going into early 2025. If you actually look at why Microsoft has kind of underperformed over the last couple of quarters, and it did have a nice start to 2024, is because of the fact that they've really kind of under-delivered on the cloud side of things. And we've actually seen deceleration for 3 consecutive quarters on the cloud segment. What we actually think Azure is going to do here going into early 25 is we're actually going to see a re-acceleration of that business. You're going to see Blackwell kind of be penetrated within kind of the Microsoft ecosystem. You're going to see greater AI capacity, more AI workloads out there. And as a result, that more favorable mix will also support higher pricing out there. So overall, we actually see a re-acceleration of the cloud business on top of the fact that valuations, again, on a 2026 basis, in the mid-high 20s for Microsoft based on our estimates, which we think gives it some upside potential here over the next 12 months, given historically this is a stock that trades about 30, 31 times on a forward basis.
Satya Nadella, the very highly regarded CEO of Microsoft, has been in that job now for about 10 years. Is there any talk of succession planning at Microsoft?
No, not at this point in time. But listen, I think he's going to be around for a while longer here. I think that, the setup here, as far as Microsoft is concerned, when you kind of think about, where they've pivoted here over the last couple of years, and clearly the focus is going to be on AI, the focus is on the cloud. We think the setup, no matter who is going to be CEO kind of over the next kind of, 5 to 10 years, Microsoft is well positioned at this point in time. You're looking at kind of the company finally hitting kind of a $10 billion annual run rate in terms of their AI business, likely here in the December quarter. And we see very kind of nice growth to these higher levels in the coming quarters. There are definitely talks out there about, a guy like Sam Altman potentially eventually taking over the reins at Microsoft. But at this point in time, all speculation.
Okay, let's move on. Salesforce is also a stock you like.
Yeah, Salesforce is a name that we do like, and it kind of goes with our theme with the fact that we do think kind of this is a good setup for software going into 2025 relative to semis, which typically see some multiple compression going into this third year of a tech bull market. But as far as Salesforce is concerned, again, this is a company from a valuation perspective, reasonable valuation in the mid-20s on a 2026 basis. And the company finally has illustrated a very good AI strategy looking ahead with their Agentforce AI platform. This is, we think 2025 is going to be a year that is going to be focused on agentic AI. And when you kind of think about Mark Benioff, the CEO there, he has kind of been maybe the biggest spokesman in terms of that theme, kind of looking ahead here. So Salesforce won't get a ton of revenue tied to this Agentforce platform here over the next 3 to 6 months. But what's important is they're going to see some very nice momentum, we think, in terms of contract bookings and signings, and that's going to create a really nice setup going into the second half of the year and into 2026.
Okay, we will have to leave it there. I'll just tell viewers that Angelo's third pick is Marvell Technologies. He sees an outlook for improving trends in artificial intelligence with long-term 20% growth in earnings per share. That's at Marvell Technology. Angelo Zino, thank